How does somebody almost get turned down for a mortgage with an 800 credit score, making almost 100 grand a year, and about $50,000 in the bank? And how did we avoid this outcome in the end? As a loan officer, when I work with people, one of the things I always do is run a comparison between conventional and FHA loans to check what the lowest payment is and the lowest cash to close. In this particular case, the way it worked out was FHA had a slightly lower payment, even though the loan balance was slightly higher, and the cash to close was slightly lower. So the buyer wanted to go with that. So when we start the loan process, we collect everything and we send it to underwriting. The underwriter looks in the bank statements, and on an FHA loan, they're required to look to see if there's any presence of a business. And there were transactions going in and out, which made it look like there might be a business. So the underwriter asked us to verify that was no business. And how they wanted us to do this was collect the 2022 tax returns to validate that there was no business going on. When we reached out to the borrower sent us the 2022 tax returns, and there was a business. And not only was there a business, but there was a loss of about $8,000 on the business. So now we had to take this $8,000 and subtract it from their income for qualification purposes. So they were no longer making 100, they were making 92, and they no longer qualified for the house. So in this case, we had to switch them from an FHA loan to a conventional loan, because on a conventional loan, if you're running a separate business, regardless of the transactions in the bank statement, we don't have to count those losses against you. So that's how he ended up almost getting turned down, and that's how we resolved the problem so he could end up purchasing the house he wanted.